Well, hello guys, Namaskar, hope you're doing fine. It's been a couple of months already since I posted my first video. And since then, the one thing that I've emphasized upon the most is the diligent adherence to asset allocation. And apart from equity, which you usually do, try and be equally cognizant towards other asset classes like silver and gold, and also fixed income. But I couldn't have stressed upon more on investment in silver and gold, particularly amidst these very difficult and volatile times. Since then, gold has only moved up in the backdrop of this uncertainty and has generated more than 15% returns. Silver has rather been muted, but still about 4 to 5% up. So this traction again begs the question as to why does it actually make sense to invest in these two asset classes and allow them to be an integral and continuous constituent of your overall asset allocation model. We'll try and keep it simple, short and sweet. So starting with gold, every time there is uncertainty in the economy and then subsequently the capital markets, gold is usually considered as a safest haven in which investors confide in, and so do the central bankers. In fact, in the last about more than 2 years, the returns on gold have been more than 60% because so many investors, both retail and institutions, have flocked to this asset class because of global tensions and of course high inflation. So in the last about 5 to 7 years, investment in gold is no longer confined to jewelry needs, as has been the case in this country for a number of decades. Over the last 15 years, the price of gold has moved up from rupees 18,500 per 10 grams to almost 90,000 rupees per 10 grams. As we speak, astounding, isn't it? A compounded aggregate growth rate of more than 17%. Now, United States of America is bound to go through recession soon, as Trump has already made up his mind to be mindless. Most recently, the selling of the US bonds made the yields go up to alarming levels, and now increasingly the world has begun to lose its faith in the dollar and their treasury bonds. The dollar index has also fallen dramatically from about 109 to less than 100 levels in the last 3 months. Hence, central bankers are building additional reserves in gold than carrying them in dollar. In the year 2024, global central bankers like our own Reserve Bank of India purchased approximately 1,200 tons of gold. In the prior 2 years too, they bought collectively in excess of 1,000 tons. In India too, the percentage of gold reserves as a part of the total reserves until about 2019 was 6.7% and is now 11.5%. So you can very well imagine the quantum of buying in this space. Now, retail people classified like people like you and me have also bought gold in droves through index funds, exchange traded funds, and of course physical gold. That was about gold. Now let's move on to silver. Just like gold, there are multiple factors dictating the price of silver. The metal's great utility in the renewable energy applications, emerging electrical vehicle technologies, telecommunication, and power generation have created a strong demand for silver in the last 10 years. Its ability to also beat the inflation handsomely over the years has led it to being recognized amongst the investors likewise. Since the correlation with other asset classes like bonds and equity is very low, it makes great sense to have silver in the portfolio from the point of view of diversification too. Apart from the investment value, of course, the major properties of silver like ductility, malleability and reflectiveness, and more importantly, thermal and electrical conductivity relative to other metals like copper has made it quite valuable in the modern economy. Because the new mine discoveries have been very low, there has been a great mismatch between demand and supply. The demand has been growing at about 14 to 15% and supply, because of the reasons that I mentioned, has been confined at about 7% levels or so. So huge mismatch, isn't it? Just like gold, silver can also be invested through index funds or exchange traded funds. The purchase and ensuring quality and storage of the metal is the responsibility of the respective fund houses. And thus the two modes I mentioned can be a very convenient and secure way to invest in the asset classes. Last 1 year, the return for silver has been around 30%, but unlike gold, silver can be volatile as its rise or fall is most likely to do with business cycles and the respective demand for it. So it can be tactically positioned asset at the beginning of a cycle or capital formation in an economy. So it's usually very important to consult your advisor before you make a decision on it. Well, that's about it about silver and gold. Do heed to what I spoke about. To my mind, both silver and gold should be at least 10% of your investment portfolio at all points in time. and the time today couldn't be more conducive to invest in these two asset classes. Well, although this video was supposed to be only about silver and gold, and I just can't stop myself from reiterating what I always do, especially in these times when the interest rates are slated to go downward. Now at even faster rate. If you remember, I did mention 2 months back that the softening of the interest rate cycle was about to begin, and Reserve Bank of India would soon take some drastic measures, taking cognizance of the economic situation here. We've been seeing some kind of slowdown for about a year and a half now. So whenever interest rates fall, the value of the bonds rise, and hence bond funds or government bond funds tend to do better. So it would certainly also be worthwhile to invest in these kind of funds. The underlying security risk is zero, as these are central government bonds, and hence risk-free. And of course, the interest rate risk is in the investor's favor as interest rates are going down. So makes all the sense in the world to invest here too. Do confirm it with your investors too, by the way, before taking a decision on this asset class too. So friends, on that note, goodbye for now. Hope you stay well. Do subscribe to the channel for regular updates. See you very, very soon on yet another important market situation or information. Take care of yourself.